right, let's talk about the economy and where we're at. So, we are headed for a financial hurricane, right? It is not going to be pretty. Right now, it feels like we're in the eye of the storm. But if SVB, the banking collapse, has not formed a shot against the bow, like if you haven't noticed that, you're going to be in for a world of hurt the next, I think, 1 to 2 years or more, right? Let's backtrack and see where we're going. So the Fed's raised rates, right? That's going to put financial pressure on everything. Our government hasn't made it easier to manufacture things. And so what that's going to create a lot of stagflation, right? Prices that go high because of inflation and wages that stagger. Now, how I think the dominoes are going to fall is the Fed is raising rates and going to hold them there. What they say is every time the Fed raises rates, it takes about a year, 6 months to a year or so to feel the effects, right? So in the last year, they've raised it, 4%. We're not going to feel the whole effects for another 1 to 2 years if they slowly raise it over a year. Companies are going to feel the pressure on this. They're going to feel the pressure on their profits. They may make the same, but they're not netting the same. This causes their stock price to go down. This causes if they can't market more to make more money, what this is going to cause is going to cause them to start to lay off people or close locations that aren't performing the best, right? So they're going to keep their best locations, their best people, but all the fat, as they call it, is going to be trimmed off. And that's going to cause layoffs and downsizing, right? Both to regular Joes, people who just have normal W-2 jobs, and investors. Because if Facebook doesn't rent a building from you as an investor, that $1 billion commercial spot that you got, well, it's not going to yield what it does. We're seeing that in San Francisco over the last few years. So layoffs are going to start to happen, right? People are going to start to scurry around for jobs. The early ones will find some, others will pick them up, but once this starts to come to a tail, it's going to be really bad, right? And we haven't seen earnings go down very much in comparison to what it will be, because the consumers, they control everything, right? They influence the market more than anyone else. When they can't buy or don't choose not to buy, companies are going to feel it even worse. Right now, we're feeling a little bit like this turbulence, okay? It's not bad. It's maybe a little bit noticeable, but it's not going to make us, worry for our lives. I think that's going to come in the next 12-ish months or so, maybe 6 to 18 months. We'll see. But what is going to cause the consumer to stop spending, right? One, they don't have any money, so they lose their jobs, right? Let's say they have their jobs. What are they doing now to live at the same level that they want to? Well, they're running the credit card, okay? They are running that credit card, and they're running it wild. The issue is that eventually that credit card company will say, no, you can't have any more. You're maxed out, right? And the average American has $500 to $1,000 in the bank, if they're lucky. When that happens, they can't spend more, things will break. Things will break in the economy. The Fed is breaking things on the commercial side. Credit crunches will break things from the underside, from the consumer side, and it's going to be a whirlwind of pain. It's going to be horrible, right? The SVB banking collapse is just a shot across the bow. Another one, if you haven't heard, McDonald's last week started to do massive layoffs from their corporate side. Yeah, if McDonald's is laying off, that should be a warning sign for you, all right? These things will continue, right? With people that are naysayers, I ask them, like, well, what's going to make our economy go up? Like, what's going to make it go up? Besides printing more money and throwing more money at the problem, which has diminishing results. And the farther you delay it, just like an infection or something, the farther you delay it, the worse it's going to become. So, what should we do about this, right? Paint the picture. It's going to be horrible. No assets class will be safe. Okay. So, what are my thoughts on it? Right? What am I doing? Well, first, let me ask you this. Look at your liabilities, right? Look at what money is going out. big into real estate, love it. Let's take a rental house. For example, let's say it's $1,500 a month. We're renting it out for it. Your bills are, you know, $1,100. Let's just say $1,000 a month. Well, that's tax, title, mortgage, everything, right? Insurance, all that stuff. Well, if you've got great tenants and they've been paying, they've been amazing, and then they lose their job, those tenants, which by the way, they won't really tell you that as a landlord. You're just gonna have to find that out through the next part. 3 months later, they stop paying rent, right? And you talk with them, and they say, okay, yeah, well, I lost my job. You know, I'm trying to find new one. Cool. And sometimes you're depends on how the situation. You might be very firm with them, or very like, hey, you guys are great. I want to give you some extra time. You know, we'll work with me on this. But let's just say 3 months goes by, still haven't paid rent. All right. Then you start to move into the eviction phase. You file the eviction. You do all that good stuff. You get a court date of 90 days later. What? Yeah, because everyone's going through this, and so everyone's evicting people, and so the courts are backed up, right? We saw this during the pandemic. It was bad. You could get a court date within 2 to 3 months, typically, right? So let's just say the court's 60, 90 days, whatever, pick a number, right? You go to court, the rules in your favor, cool. You get your writ of possession. It takes 2 weeks to process, and the cop goes out there. It takes 2 weeks to get the police officer out there. To evict them, if it's not raining, and if all these other things happen, right? So you're looking at maybe, through this scenario, 3 months of just letting them stay and trying to work with them, 3 months to actually get the writ and get everything going. Maybe. So where was I? So in that scenario, you're gonna have like 6 to 8 months, at 6 months at the lightest, at the least, 8 months at the, maybe 8 or 9 months at the most, of carry costs with that person in there, right? That comes out to about, depends if it's 6 to 8 months, just say 8 months times 1,500. That is $12,000 that you're out. You're out. You didn't get that money. Now that, but you might say, okay, well, it's only $1,000, so cool. $8,000 out of your pocket for someone else to live there. Okay. Number two, once you get them out, I don't know if you guys have ever evicted anybody, but they don't repaint the walls and re-clean the carpet before they leave, right? So you're gonna have to do that. There might be holes in the wall or something. There's gonna be some damages, right? That's probably gonna take 10 to 20,000. So at the least, you're looking at a loss of 18,000 ish. And again, these numbers are, you know, stick my finger in the air, based on experience, and it depends on where you're at and everything. But you're looking at a loss of about 18,000 to maybe up to 25 or 30 or something, depending on what they did. Hopefully they didn't like break pipes and stuff. It happens. But that's a huge loss to that property, right? And at the same time, let's say your property is staying at the same or going down in value, you've got to shell that all out. So that
this on doors and cross check, please.
That asset has become a liability, right? It is costing you more than to own it. So do your balance sheet, look at that, make sure that you can service your debts even if they're in bad times and hard times like that, right? And here's the
After a disarmed and check for right.
All right, I'm gonna tell you the 4 things that I'm investing in, and we're gonna go from there. But number 1, investing in my own business, right? So if you run a real estate firm, an insurance agency, if you run some sort of business that has, again, very low liability carry costs, invest in it. Number 2, I'm investing in energy. As you know, you've known me on my channel. I should probably just throw my numbers on here, thinking about it and go through that. But I'm making gobbles of money on energy right now, and I'm getting partners in to do it because it's been so good. And they get the lion's share and everything, but it has been amazing. So I'm going to continue to invest in that. Number 3 is cash or cash equivalents. Right? Hold some money. I know there's fears of inflation, but inflation, it's always a game of trades, right? If you make $100,000 and you spend $40,000 for a living, you're saving $60,000, right? If inflation goes up and you have to buy more, right? You're only taxed, let's just say $50,000 now. You're only taxed on that extra $10,000. You're not taxed. The inflation isn't taxing your $50,000 in the bank, right? Because you haven't traded it for a service or good. When you do, that's when you incur the tax, in a sense, right? Or you lose to inflation. So if that is sitting in the bank, or maybe treasury bonds or something like that, then it could actually be used for really good buying opportunities in the future, right? It is a little bit of a safety net and a nice safety egg, but it also could be used for opportunities in the future, right? That's the key. And so I'm holding some cash, right? Because at the end of every inflation or at the end of every inflation will eventually eat itself back in, right? They say the solution for high prices is high prices, right? And that's true, just the timing isn't always there, right? So you can wait for inflation to cool off and then drop back down into a recession, right? Hopefully not a depression, we'll see, into a recession, and then use that cash to buy things on sale and wait for them to go up, and then your net worth just flies up, right? And that's what all the smart money is doing right now. They're converting to cash or cash equivalents, and having some assets that are low in liabilities, right? And the fourth thing I'm doing is really investing in myself. Any type of education or knowledge or self-help or health-related service, that's what I'm doing. So those are my four that I'm investing in. Other things I'm not really, I don't see a lot of juice worth the squeeze, if you get my point. I don't see the lowness of liability. And so whatever you do, whatever choice you make, just make sure that you're protecting yourself. You have a good balance sheet that you can weather the storm, that you can service your debt payments, right? And not just for like a few months, but for like 12 or something, like a good amount. Make sure you have cash coming in. That's always a good thing. And cash that is not dependent on like a W-2 job or something to get fired, or an asset that could turn into a liability. Hold some cash. That's what I'm doing. Invest in yourself, your own business. And then the fifth thing is contact me if you're interested in energy. I had to put the plug in. But other than that, I hope you guys are safe. Thanks for watching. Thanks for subscribing. If you have any other questions, like, comment on the bottom. I want to know what to help to bring you, to give you value. So please post that in the bottom.